Terry Ryder bringing you this week's edition of my regular Good News Bulletin. There's a new report out this week from Deloitte Access Economics, and it suggests that Australia is in a much healthier economic position than most estimates predicted in the wake of the pandemic. Deloitte partner Chris Richardson says that the ACT and the Northern Territory, rather surprisingly, appear to be the best position for a successful rebuild from the pandemic impacts. Richardson says that the overall outlook is healthier and happier than those from the Treasury and from the Reserve Bank, and for one critical reason. He says consumers are spending much more than expected. Richardson says the central bit of the economy and the spot where the fear may have showed up the most has actually done surprisingly well. Retail sales in May increased almost 6% on the figures from May last year, which Richardson says is bloody miraculous. And I would tend to agree. Now, the Reserve Bank Deputy Governor, Guy Debelle, has also said that the economy's performance has turned out to be somewhat better in the June quarter than expected, but he suggests the federal government will need to extend its support for the economy a little bit further. The RBA had originally forecast that hours worked would decline by 20%, but recent figures suggest that a 10% drop is more likely. The unemployment rate rose to 7.1% recently, but that was much better than many economists had predicted. Now, another sign of better performance than expected is with job advertisements. Now, Australian job ads jumped a record 42% in June from a low point having previously dropped as large parts of the economy reopened from the lockdowns, but job ads are still lower than a year earlier, as you might expect. Monday's figures from the ANZ Bank Group showed total job ads had jumped to around 89,000, which was up from 63,000 in May. Reports suggest that employers have taken about 250,000 Australians back on their books since mid-April, representing about a third of the jobs that were lost in the initial 4 weeks of the COVID-19 crisis. In the latest ABS report, which draws on Taxation Office payroll data, shows that the number of payroll positions lifted about 3% since the low in April. Now, turning to property markets, it's a particularly good time to be a first home buyer in Australia, provided, of course, you have a secure job and provided, of course, you don't live in Melbourne. There are multiple support schemes from both federal and state governments available at the moment, and of course, interest rates are ultra low. The 1st of July release of 10,000 new guarantees under the First Home Loan Deposit Scheme is expected to be well received by those looking to enter the market. The Housing Industry Association says it's expecting a positive response to the new allocation, with many first home buyers hoping to take up the offer and move their home buying plans along in a faster fashion. HIA executive Kristen Brookfield says the deposit gap remains the largest impediment for most people in accessing a home loan and starting their home ownership story, recognising that many people have the capacity to meet regular loan repayments but are struggling to save that extra needed to make a 15% deposit, and that's the key to this federal government scheme. This is the second intake of the First Home Loan Deposit Scheme. The first intake was on the 1st of January. It was allocated very, very quickly, and it's designed to give first home buyers a leg up to the property market by providing banks with a guarantee so that young buyers can get into their first home without having to pay mortgage insurance, which is hideously expensive. Nathan Delbon, Chief Executive of the National Housing Finance and Investment Corporation, says that around 5,500 applicants to the First Home Loan Deposit Scheme are already in their new homes. That's from the first intake from the 1st of January. First home buyers can also access the federal government's home builder grant of $25,000 if they opt for a new home, and there are various state government assistance schemes also available, including stamp duty exemptions. But according to a new survey published recently, prospective first home buyers are, quote, confused and overwhelmed by the housing market and the number of grants and incentives which are available to them, which is stopping some of them from actually following through and doing something about it. The survey, commissioned by Mortgage Brokers Aussie, quizzed about 1,000 Australians looking to get into the property market in the next 5 years, and it found, according to reports, that most were unclear and did not know about the first home buyer grants and schemes. 85% said they didn't know about the First Home Loan Deposit Scheme and had never heard of it. Around a third of those surveys said they did not understand the grants offered by state governments across the country to help first home buyers get onto the property ladder. Aussie Chief Customer Officer David Smith says the results are surprising, adding that the coronavirus pandemic had created confusion in the market, as had initiatives such as the First Home Loan Deposit Scheme. All I can say is it's not a bad problem to have. There's never been a time when there was so much help available to first home buyers. And if people are too lazy or too stupid to take advantage of it, then maybe they deserve to miss out. Now, meanwhile, inquiries for land from would-be homeowners have more than tripled across Australia since April, following the announcement of the federal government's home builder scheme, and that's according to data from realestate.com.au. Developers are being flooded with inquiries on the back of the June 4 announcement of $25,000 grants for new builds, with that real estate portal reporting the number of people asking about land offers up by 63% since the announcement, and the record high for land inquiries more than triple the levels seen in April. That means they're up 222%. REA Director of Economic Research Cameron Cushing says that despite early criticism of the package, it's obviously proving very attractive for first home buyers, and it's likely to inspire many of them to bring forward their plans to buy. Now, looking at vacancy rates across the country, which is a really good indicator right now where things are at, in most markets across the nation they remain low despite the pandemic impact, although there are exceptions. Domain economist Trent Wiltshire says that while each capital city rental market has been affected differently by COVID-19, the national vacancy rate held steady in June, stabilising after a rise in April. He says some states have decided to open up borders and economic activity is returning to somewhat normality. However, Victoria, of course, faces a second wave of virus transmissions. He says vacancy rates are broadly steady in Melbourne, Sydney and Brisbane, while Hobart, Perth and Darwin have seen falls in their vacancies. Sydney's vacancy rate remains about 3.6%, which is a little bit higher than it was a year ago. Melbourne's vacancy rate has risen for 4 consecutive months, but it's still around 3%, which is reasonably acceptable, particularly in the circumstances. Vacancies are much lower than that in the small capital cities like Brisbane, Adelaide, Canberra and Hobart, and also in many of the regional cities. Now, media, of course, continues to emphasise the negatives in any set of figures that comes out about real estate. And here's one example. A recent newspaper article shouted that 1 in 10 off-the-plan apartment sales have fallen over during the past 3 months because lower valuations due to weaker demand and oversupply had prompted banks to reject final loan approvals, forcing buyers to give up millions of dollars in deposits. Now, this negative slant on the situation came, not surprisingly, from the nation's worst tabloid rag, the Australian Financial Review. It said that out of 35,000 off-the-plan settlements scheduled between March and June, about 3,000 have collapsed due to problems with a lower valuation. There is, of course, another way of looking at it. Despite the negative impacts of COVID-19, 90% of apartment sales have settled in recent months. That means 32,000 out of the 35,000 off-the-plan deals have proceeded to settlement as planned, and that, in the circumstances, I think, is a pretty good outcome. Another positive story is that the number of mortgages on suspended repayments through COVID-19 hardship measures is declining, with some homeowners opting to begin paying down their debt earlier. Major banks say that the number of customers asking to defer their mortgage repayments has cooled off in the past month as economic conditions across the nation, generally speaking, have improved. The banking sector in March had implemented 6 months mortgage deferral to assist borrowers who had been adversely affected by the shutdown. And according to the Australian Banking Association, a total of 485,000 home loans had been deferred. But ABA Chief Executive Anna Bligh says, encouragingly, banks are seeing that many deferred customers are choosing to resume making their loan repayments. And finally, today, SQM Research, which is a source of very good information on residential real estate, it published its weekly prices index, and it indicates that nationally, house prices have risen slightly, 0.2% in the past month, while apartment prices nationally have risen 1% in the past month. 5 of the 8 capital cities have recorded increases in their house prices in the past month: Brisbane, Perth, Canberra, Darwin and Hobart. The 3 cities to record decreases in house prices in the past month are Sydney, Melbourne and Adelaide. But in annual terms, 7 of the 8 capital cities have house prices higher than a year ago. The only exception to that is Darwin. Nationally, house prices are up 6.7% in annual terms and apartment prices are up 5.6%. And in the circumstances, all of that, I think, is remarkable. Residential real estate continues to defy the doomsday forecasts of the nation's gaggle of chattering economists. Let's face it, if you ask typical economists to predict what day it would be tomorrow, most of them would get it wrong. Bye for now.